But I want to move now from the king of the alts to the king of the cryptoverse, which of course is Bitcoin. You've
Yeah,
talked about the four seasons of Bitcoin. Can you walk us through them and where do you think
sure.
we are right now?
So it's surprising to me that more people, I mean, a lot of people sort of have picked up on the four seasons, sorry, rather the 4 year cycle, but they haven't really studied or recognized. And I did a lot of deep dive research. I mean, literally going back to 2015 when I started seeing some repetition of the first cycle. Um, that it has been as predictable as cycles in the stock market, like sell in May and go away, or the Santa Claus rally. And yet, when I try to explain this to traditional investors that there's cycles in crypto like there are in real estate or in the stock market, they're like, ah, no, it's a Ponzi, blah blah blah. And so I thought I just really needed to go and write a deep dive book. I mean, I've been doing presentations at conferences going back to like 2015, 16, and really a lot more at family office and kind of TradFi events the last 4 or 5 years. But I thought, you know what, I need to go and put it all in one place, and I wanted to come out right as we were going into the next bull market. And so I, in my book, projected, and I finished writing the book in early August of last year, that Bitcoin summer, which is the day that you pass the all-time high of the prior cycle, would happen in early November if Trump won and late December if Camel won. And sure enough, Trump won, and it was November 5th that we hit that Bitcoin summer. So I'll give a quick summary of the four seasons and the way I describe them.
Yeah.
Satoshi in the white paper said that as long as there are more people using and buying Bitcoin every 4 year cycle, then there are new Bitcoin put on the market, which of course the miners get cut in half every 4 years. The price has to go up. It's just simply supply and demand. And my addition to that is, yes, it goes up, but not in a straight line. And if you look at sort of the price at each halving, which is so far, if you look in a rear view mirror, been as close as we can get to the fair market price of Bitcoin. You've never had a halving where it was at the parabolic top of a market. You've never had a halving where it was at the bottom. It always seems to come back to the median and where it should be for that cycle. First halving, $12. Second halving, 670. Third halving, 8,700. And fourth halving, 64,000. So that's pretty substantial growth from 4 year cycle, the 4 year benchmark to 4 year benchmark. Now within those cycles, you've had 20 to 100x variations. So your first halving was at $12, and then it went up 100x to the top of the cycle, which is 1,200, and then it went down 85% to 171. And then from there, I basically, the easiest ones to tell are Bitcoin spring and Bitcoin summer. Bitcoin spring is really simple. It's the day of the halving. That is when the seed of the new cycle is planted. So all of a sudden you go in one day from the miners being profitable to being unprofitable. If on average the day before the halving they were making 20%, all of a sudden they're losing 30%. Now in the early days, you actually had some pretty wild adjustments to difficulty. I mean, I remember one time, I think it was around 2013 or so, 2014, that like you end up having like 20% difficulty jumps or like cuts every 2 weeks when the difficulty adjusts. You just didn't have that as it gets to be a larger asset class. And the very first year and a half, the Bitcoin difficulty, and I have a whole chapter on this, mining and difficulty, and how important it is to Bitcoin, was at level 1, which means that you didn't really need to make the math problem much harder because there just weren't that many people participating. And the equivalent of a level 1 difficulty is you can use your laptop and your math processor needs to answer a question like, what's the square root of 9, right? And then when all of a sudden the GPUs started happening, that, was Laszlo Hanich who, did the Bitcoin pizza. The reason he had so much Bitcoin was because he was the one who figured out how to use his gaming card to get a lot more Bitcoin, to the point that like Satoshi actually emailed him and said, cut it out. But he goes, I know I can't stop you, but I beg you, don't accelerate difficulty this soon. We're not big enough yet. And Laszlo ended up getting over 100,000 Bitcoin from doing that. And of course, he claims to have zero now because he bought pizza a couple times, and then finally spent most of the rest of it on a computer. But I guess you get Bitcoin at the price you deserve, and you sell it at the price you deserve. And some of these early guys just, would be multi-billionaires if they held on to even half of what they mined. But the difficulty level went and jumped from 1 to 2, and I think it was August of 2020, and then the next month it was 3x difficulty, then it was 5x difficulty, then it was 8x difficulty. Today it's 100 trillion x difficulty, which is just a phenomenal growth, right? So the day of the home miners is long gone. I mean, when it got to like a couple of 100x, all of a sudden you can't really use a laptop anymore. But now that you're at 100 trillion, and you only get 1/16 the award, so it's really 100 trillion times 16 times harder to get one Bitcoin by mining than it used to be in the early days. So the early people who, I got to interview Mark Karpelis from Mt. Gox at Korea Blockchain a week last year, which was a real treat. He hadn't talked to anybody for an interview in years, but he wanted to kind of come out and say he was involved in starting a new exchange and a new security platform. And of course, I asked him, why would anybody trust Mark Karpelis with another exchange? He didn't have a good answer to. He actually started mining in early 2010 when he was asked with his payment platform, his payment company, to go, and somebody had asked him, a Frenchman living in South America, had said, can you convert Bitcoin into euros? He's like, what's Bitcoin? He looked it up, found somebody who would take Bitcoin for euros, and then said, I'm technical, I should know what Bitcoin is. And he read the white paper, turned on a laptop, and all of a sudden, within an hour, he had 50 Bitcoin. It was like, well, gosh, that's too easy. Must not be too valuable. It was that easy to get. And then he said, but yet somebody's willing to pay for it. So he actually had a side business that was a personally owned hosting company with about 30 computers, and he just put the Bitcoin software on all of them. And within 4 months, he had 200,000 Bitcoin.
Whoa.
And then typically wound up and he said, I got enough. And he would be one of the richest people. He'd be up at like Michael Saylor and, not even Michael Saylor at the, he'd be, 200,000, that's a lot of money, right? 200,000 Bitcoin.
Yeah.
20 billion or something like that. He would be up at that level of wealth had he simply just done nothing else but just keep his private keys. But instead, when he started Mt. Gox, he moved all of his Bitcoin over to Mt. Gox and thought it'd be a safer place to store. I know.
Oh no.
There are amazing stories like that. So yeah,
that's insane.
That first pre-halving cycle is just a fascinating time, and I'm hoping in a future book to kind of like explore, in more depth the kind of stories and lessons of that era. But right now, Bitcoin Supercycle. I just want to educate traditional investors about how Bitcoin, why it's been the best performing asset class for the last 15 years, and why it will continue to be the best performing, albeit not at 1 million X returns, but still the best performing asset class for at least the next 20 years. And so basically, again, to finish the seasons, the Bitcoin spring starts the day of the halving, and it's the shortest season. It's historically only lasted 4 to the longest has been 7 months. And it ends, by my definition, when you eclipse the high of the prior cycle. So after the first halving, you had to go up to the high of the pre-halving cycle, which is $30. It went from a tenth of a penny, which is the first known sale of Bitcoin, which is Marty Malky, Satoshi's intern, as I like to call him, sold 5,050 Bitcoin on PayPal for $5. And then it ended up going up to this crazy high of $30 when the Gizmodo article came out and said, hey, Silk Road, you can go buy drugs with this thing. But there was really not that many places to buy it other than Mt. Gox. And so everybody's scrambling to buy it, and the price went up to 30. And then when Mt. Gox started having problems and getting people stuff, they're like, oh, it's crashing, and it went all the way down to $1. Now, if you bought it at 30 and just left it alone, you would have been just fine, right? Folks like I had a long chat with John McAfee once when he was still alive, and he had bought Bitcoin all the way up to about $30, and then he sold it all on the way down because he was afraid it was going to go to zero. And somebody as sophisticated as him, still panic sold. So Bitcoin summer though is becoming really consistent every time. So when you hit $30 after the first halving, that's when it started going up parabolic. Because after the halving, it's actually flat. It's flat because you have two competing forces. You have the selling pressure from miners if they don't have a kind of a savings, which they do now. They typically have traditional financing, but some of them still want to sell their Bitcoin to keep the lights on or buy new machines. And then it never goes down very far because you have people who see that the having always leads to higher prices, and they'll scoop up any drop. And so that's really why, including this last time, you had a 63,900 the day of the halving. 6 months later, you were still around 64,000. It had dropped down to a little over under 50. It had gone up all the way to a little over 70. But until you hit the prior cycle's high, which was 73,850, it didn't go parabolic. But every time, day of Bitcoin summer, again, it was in February of 2017 that it finally, went over. It was in early 2013 that finally went over $30. By the end of the year, it was 1,200. It took forever to get back to 1,200 again. You got to remember, we were at 1,200 in November of 2013, and then it crashed down, and it never got over 1,000 for the entire year of 2014. Never got over 1,000 the entire year of 2015. Never got over 1,000 the entire year of 2016. It seemed like it would never come back. And yet, early 2017, again after the next 2016 halving, it started inching up. It got to 1,000, but that still wasn't the number you needed. You needed to get above the all-time high from 2013, which is 1,240. And as soon as it got there, boom, it started going up. Now, 2017 was a little bit less parabolic in the beginning of Bitcoin summer, but it certainly ended up the way that they all do, which is kind of a blow off top. And so there was no double bubble in 2017, and you started the year around $900. You crossed into the Bitcoin summer in February when you crossed $1,200. By the time at the end of July 2017, 8 years ago, came, you were still only at $1,900. It was about $1,980 8 years ago. And yet by the end of that year, it was 19,800. So you had a 10x in 6 months. And so I think that's something that we're going to be looking at this time, sort of this pent up, kind of blow off top that'll be the fourth quarter of this year. Now we won't be 10x. We're not going to go, to $1 million this cycle, even though some people might say we will. And those are the ones we're going to, be buying at, 250, 300,000 and providing liquidity for people who want to get out at the actual top. But I do see us getting, somewhere the median point is we were at 100x in 2013 between the beginning of Bitcoin spring, the halving, and the end of Bitcoin summer, which is the blow off top. 100x up, and then a drop by the end of Bitcoin fall. So Bitcoin fall starts the moment of the parabolic top, and it ends roughly a year later. That's all it takes at the blood in the streets bottom. And the last two cycles were almost to the day. 2021, we had our blow off top around 67,000 on November 10th. Exactly 1 year later, November 10th, 2022 was FTX. And that was the bottom. Even though the whales didn't even start buying back in until it was, maybe around 18,000 because they thought it was going to go lower. And the whales, it's interesting. They tend to sell when they do sell, maybe about 6 weeks before the top, and they tend to buy back about 6 weeks after the bottom. So they're cautious in both areas.